Hi, everyone. Thank you so much for joining. Today, we're going to discuss how we can use technology and AI to move from just measuring financial access to actually measuring financial well-being and seeing whether financial institutions and financial products are really achieving the goal of helping people manage their financial lives. So today, we're going to discuss how we can use AI to enable rapid feedback loops and hear directly from clients on how they're managing their financial lives and how financial services are playing a role in this. So to begin and to introduce myself, my name is Carrie Rue. I am the Vice President of Risk and Head of Impact at Axial Capital. Axial Capital is a private debt fund that invests in fintech companies in emerging markets. And I'm excited here to have a session with two collaborators of ours who have a lot of insights on how to gather impact data, how to measure financial well-being, and also create financial products that really improve lives. And also, I'm happy to share a bit of my own experience as an investor in fintech companies in emerging markets. So we have on the panel today, we have Cynthia Merlos. Cynthia is the co-founder and chief operating officer of Vexi. Vexi is one of Mexico's most innovative fintech companies. They provide a credit card to underbanked populations and reaching clients that might not have much credit history. And under her leadership, Vexi has built a really healthy credit card portfolio that is also promoting financial inclusion and really reaching those who are looking to build their credit history. Cynthia has also been recognized as one of Latin America's top women shaping the future of fintech. Next, we also have Timon Oshimo. Timon is the co-founder and director of Weaverbirds, which is a market intelligence company that uses WhatsApp-powered surveys to gather data on client experience to help companies and also investors measure impact and hear the experiences of end clients. Timon has experience building ventures across East Africa. He's an entrepreneur with a focus on hearing human voices and using those insights to measure impact and gain customer insights. And I'll also be sharing our experience at Axial Capital. At Axial Capital, I manage our portfolio in Asia, where we invest in fintech companies. And I also lead our impact practice globally, where we try to incorporate impact into our investment decision-making. And we also try to pioneer new ways where we can measure our impact, such as the collaboration that we have with Vexi and Weaverbirds. So to start and to frame our conversation, I'm going to share a few slides that highlight a collaboration that we had with Vexi and Weaverbirds over the last few months. So as an impact investor, we always want to see not just what is the number of clients we reach or number of women we reach, but really, are we actually helping improve people's financial lives? Are we improving quality of life? Are we helping people meet their financial goals? So in collaboration with Vexi and Weaverbirds, we did an impact study where we did a survey of Vexi's end clients to measure some of the financial well-being outcomes. So I'll share a slide that highlights just a few of the findings that we had from this study. And then after that, we'll have a conversation among the three of us to discuss some insights and learnings that we have from how to use technology to gather client insights and how we can incorporate that into our decision-making to enhance financial well-being. So I'll just share my screen. Great. So I'm just highlighting a few of the results that we found during this study on Vexi's impact on financial well-being. So I think one of the really interesting questions that we asked Vexi's clients was, what was your goal when you signed up for a credit card? And have you made progress on achieving that financial goal with Vexi? And actually 80% of the clients report that they have made progress towards a financial goal or they have achieved a financial goal that they had with Vexi. We also asked clients about how Vexi affected their ability to manage their finances. And in some cases, we could see that there's a risk that we could have gotten people say, actually, it's harder to manage my finances because I have a credit card, I have to manage the debt. But actually, 72% of clients found that it improved their ability to manage their finances. So we saw similar positive results for other impact outcomes, such as quality of life, ability to manage financial emergencies, so really showing the financial resilience, reducing stress about finances, and then also supporting business owners. So even though it's a credit card to individuals, a number of the clients are entrepreneurs and are able to use Vexy to help grow their business. And then in addition to the quantitative metrics on, okay, how many clients are really seeing improved quality of life, we also got a lot of really rich quotes and qualitative insights from clients on how they're using the loan, how it helps them achieve their financial goals, whether that be growing their business or building their credit history, learning to manage their finances better. So these insights really, I think, help paint a more deep picture beyond the numbers to see, how clients are using their credit cards and how this affects their financial lives. So I'll take away the slides so we can discuss among the three of us. And I just want to discuss a few questions on the learnings from the study and the learnings that you have on using technology to measure your impact. So the first question that I want to share with everyone is just based on the findings of the Vexy study, what stood out to you as most surprising or the most unexpected learning that you had? And I think this can either be on the process side in terms of how the study went, in terms of gathering the data, or it can be on the finding side in terms of the financial well-being outcomes that we saw come out of the study. So I'll turn to Cynthia first and then to Timon and then share my insights as well.
Thank you, Carrie, and thanks for having us here. Let me start by telling you that in Vexy, financial inclusion is our core mission. We were created to grant access to the financial system to the underserved by traditional banks, most of the neobanks here in Mexico. To give you more context, only 30% of the adults in Mexico have access to formal credit. And the options they have can get to 500% APR. So that doesn't look good. But always, it's been a challenge for Vexy to show how impact looks like in everyday life of our customers, because it's very easy to say you are creating impact and you are creating access, but it's not as easy to show how that truly show progress, So something really, really empowering for us for this study we made is how Axial and Weaverbirds help us to make the right questions and use the right AI tools to understand what was going on with our customers. And the findings show us that we were just not making financial outcomes, but actually showing progress in the lives of our customers, like giving them some financial resilience. So I think that was the main outcome for me, not to show just statistics, but real proof of how we are changing lives.
Thanks, Cynthia. Timon, I'll turn it over to you to share your learnings from the Vexy study.
Hey, everyone. Yeah. Similar to Cynthia, I think so I've been in the unfortunate situation, I suppose, where I've had to use a credit card more out of necessity to make ends meet. And it can be a very expensive way to do that and a very difficult cycle to get out of. I was reviewing the results before this. And yeah, I was excited to see that how Vexy's customers can access, or how the access to the credit card was really being used as a tool to build financial resilience. So building credit, having something that they can use in an emergency, being able to better manage their finances, these things that Carrie mentioned before. And an interesting part was also, that around I think a third or so were using it for business expenses. And of those, almost 3/4 reported a revenue increase. So yeah, just seeing how sort of powerful, similar to what Cynthia was just saying, how powerful of a tool it has been for Vexy's end users and customers was really interesting.
Thanks, Timon. Yeah, I'll just share a few learnings from Axial's perspective as well. I think one is on the process side and one is on the financial well-being outcome side. For the process, so we have been going through this process over the last year or so of testing different tools where we can measure impact outcomes better. And we had tried in the past to use different tools. And I think the study with Vexi, we got really strong results in terms of getting the results really quickly because we were able to partner with Weaverbirds and they were able to distribute the survey in partnership with Vexi to gather insights from their clients really quickly and then analyze the results really quickly. So I think this helped us really learn how to refine our approach of using technology to get client insights more quickly so that for us as investors, we can actually do this during our due diligence process because it can be very quick. And then we can assess our companies achieving the impact we want to see or not before we even invest. So that was a really, really great learning. I think this was the fastest study that we had done on gathering client insights. And then on the financial well-being outcome side, I think as impact investors, we're often skeptical of credit cards. I think when we invested in Vexi, we sort of got behind the team and their real vision for supporting financial inclusion. But we still always had this question, right? And sometimes investors who support Axial, they also are wondering, are the consumer loans that you're financing really creating positive impact? Is it trapping people in a cycle of debt? So we wanted to understand this better, and it can also inform our future investment strategy on should we support more, companies in this space. And I think it was super interesting to see that on the questions around pricing, is the pricing a burden, for example, actually it was not really a top concern for the clients. Actually, the main feedback that the clients had was, I want a higher credit limit. So actually, because Vexi is like a starter credit card, they will start the client with a smaller credit limit and then grow over time. That actually it is not necessarily over indebting the clients from the start, but actually helping them gain access to credit over time in a way that can help them build their credit history. And I think it was really interesting that Vexi they proposed actually adding the question in the survey about achieving your financial goal. And I think this was a really interesting insight because we hadn't asked this question when we've done these kind of studies with other fintechs in our portfolio. And it really helped us realize this new dimension of helping people achieve their financial goals, like build a credit history for people who might have no credit history or damaged credit history to be able to build back, and the kind of impact that can create on their financial lives. So that was really, really an interesting learning for us. Great. So moving to the next question, which is on technology, which is the main topic for this session. So technology and AI are often talked about in broad terms. So I'm curious to hear from each of you a concrete way that technology has changed how you think about gathering client insights, and what are some things that have become possible now with technology that wouldn't have been possible in the past in terms of being able to gather these kinds of insights on as you do your work. So I'll start with Timon this time and then pass it to Cynthia.
Yeah, of course. I think for us, technology has really enabled us to take a very manual and therefore slow and costly, very expensive process, and build a workflow that can offer kind of end user feedback, often qualitative at scale, at around 20-ish% of the time and cost of traditional manual methods, without compromising on quality and rigor. This has really been enabled by this, new wave of really powerful and accessible AI tools that we've all been used, I'm sure, or been impacted by in some way. And yeah, they can be seen as both an opportunity or a risk, depending on your perspective. And I can definitely see both. But I think, the bottom line is that 5 years ago, Weaverbirds wouldn't have been a business. But because of the access that we have now to these very powerful tools, we've been able to build a business that again offers sort of something that historically, and that our incumbents might be offering for a service that's very time consuming and expensive for around 20% of the time and cost of what these services have historically been.
Thanks, Timon. Cynthia, would love to hear from you, especially as you've done other studies maybe outside of the collaboration with Vexi and what has become easier over time in gathering insights using technology.
Yes, and just to link what you were saying before about considering credit cards all but financial inclusion or impact, I think is the approach. It's how you include financial education and how you add like this gamified experience into getting people to go from starting to use a credit card to actually be a very heavy user and using it as a tool to leverage your business, your finance, whatever. Just going back to the question, for us, the most transformative uses of technology has been in our customer service, because we actually are using an AI-powered support bot. And in the past, before we had this, we had traditional tools that gave us just statistics, like we could track response times, resolution rates, or volumes, but like the finer details, the emotion, the sentiment, the progress behind those numbers were much harder to get. And with AI, now we can analyze 100% of our customer interactions and the sentiment in real time, because it helps us to really listen our users at scale. Before AI, it was very manual. And now we can understand what is frustrating them, what's confusing. We can also know what is making them feel more confident, more supported. And this has allowed us to detect patterns and opportunities that were invisible before and to act on them quickly. So at the same time, AI is giving us more efficiency to respond instantly to common questions. And we are using our human ages to focus on the most complex cases, the one that needs that human empathy. So the result for us is that like we can combine speed, scale, and humanity. It improves response times. It deepens our understanding of customer sentiment. And as we are seeing it, AI is helping us to scale empathy, not to replace it, if that makes sense.
Yeah, that's really powerful. I think being able to listen to clients at scale and really understand their emotions, their experience is really powerful, and really the goal of a lot of financial institutions that are focused on financial inclusion. Just to share also our experience using technology at Axial Capital. So we, as a data-driven investment fund, have always been gathering a lot of data to measure the impact that we create. But I think in the past, it has been mostly focused on the impact outputs. So this would be like, how many loans are we financing? How many women are being served? How many low-income people are getting access to finance? Which is a great start to basically measure the scale of financial inclusion. But it's not necessarily telling us, okay, for each woman, low-income woman who got a loan, was it actually improving their financial life? And what was the impact of this loan on helping them meet their financial goals? So in the past, it had been, I think, prohibitively expensive for an investor to do this kind of assessment across our portfolio at scale to understand really those financial well-being outcomes. So we could do, select case studies here and there with certain companies in our portfolio. But now we've seen that with tech-powered tools such as Weaverbirds, and we've also tested using some other solutions that also use technology to gather feedback from clients, whether it's through WhatsApp bots or through conversational AI tools, that this can lower the cost. So we can actually gather a lot of data more quickly and at lower cost, so that it can actually be feasible for us as investors to scale this across our portfolio and then have it basically become a feedback loop where, as we learn more about what products are creating the most impact, it can be used to shape our investment process so we can channel more capital towards companies that are really promoting financial well-being. I also want to just ask a more specific question to Timon from Weaverbirds. So AI and technology have changed how we gather client insights to make it faster, more scalable, more affordable. But I'm curious to hear where you see applications of AI in speeding up the data analysis or data collection, but where do we still need to have a human in the loop to prevent any potential either negative client experiences or blind spots in the data. So where are you seeing that AI is the most useful in this piece, and in other pieces we need to still have human involvement in the process?
Yeah, super relevant question. First, I think it's important to think of AI as a tool, first and foremost, and not as a solution in and of itself. There are a lot of AI solutions on the market, of course, but I think especially in this sort of application of this type of use case, thinking of it as a tool is a much better approach, and how we've really approached Weaverbirds. I think in our case, it's really augmenting. It's like about augmenting human intelligence with like repeatable, scalable tools, while still keeping a human in the loop to really like quality check and manage those processes. Like Cynthia was saying before, I think some of this is on the sort of the contextual or like the very contextual or nuanced, open-ended stuff. Making sure that sort of the coding that our tool is doing is culturally aligned and relevant, things like that. But I think overall, like the human in the loop is really to make sure that we're not sort of using AI as like as a solution in and of itself. It's not a black box into which information goes and information comes out. I think it's really important to have a human in the loop to really quality check that process and make sure that all sort of insights are, and like every insight can be traced back to a statement or to what somebody said. And that's not something that, I think you can't put too much trust into AI. And that's why it's important to have a human in the loop. Another thing, I think it's like an exciting area where it really adds value is that it kind of levels the playing field. You were mentioning, Carrie, that a lot of this sort of measurement stuff has been historically really expensive and cost prohibitive. And from a measurement perspective, kind of see these AI tools as being able to kind of democratize access to sort of more rich qualitative insights, allowing like smaller or more undersourced organizations or companies to generate insights that are like previously only feasible for super well-funded organizations or institutions or companies. So I think that's exciting too. Bottom line, I think approach it as a tool, approach it critically, and use humans for heavy quality checks.
Great, thanks, Timon. So we heard from Timon on the sort of market intelligence perspective. Now I want to turn to Cynthia on the operator perspective as actually running a fintech. I'm curious to hear how you balance, wanting to really listen to client experiences while also needing to manage the operational efficiency of the business, and how can you actually incorporate some of the lessons that you learn when you gather client insights to inform the product design process and improve your product over time?
Yes, I believe we have learned so far that AI is providing two wins to our company in terms of operational efficiency. AI give us more efficiency, and that makes us more sustainable. And targeting the underserved is very important for us to be able to run our operations at a low cost. So we can automate data processes, like everything, to keep the company lean and running and listening fast, But as efficiency give us sustainability, empathy give us relevance. So what is bringing us, and it's also a business decision, to be empathetic with our customers is a business decision because it shows in how you create your products, So what we do all the time is, because now we are listening real time our customers' pains, but also our customer satisfaction, that is embedded in our product design all the time. I was telling before that we are using a gamified experience, and that experience is always working to improve and to improve, So when we hear something from our customers repeatedly, it goes to our backlog, and we prioritize it on that sense, I was telling a lot about financial education. So that's what, like, listening to the customers, let us know in real time what they need to know, what they are not getting right, you know, because for us in our operations, it's very important that we run through efficiency, but also it's a positive cycle that we get to our customers to use correctly our credit card. They win and the company wins too.
Thanks, Cynthia. Great. And then I also want to share a bit of perspective, maybe from the investor side, on how do we decide when we think about financial well-being, we want to use AI to measure financial well-being. How do we decide what are the outcomes that we're targeting, and how do we decide what we really want to measure? So in the case of the study we did with Vexi and with Weaver Birds, we designed the questionnaire kind of collaboratively, because we want to also get Vexi's input on what are the insights that they want to see from their client base, what is the impact that they're trying to create, so we can see how they're making progress on achieving the goals that they have of promoting financial well-being. But the impact outcomes that we look at really fall into a few categories. So one is on financial access, understanding, okay, how many people for them it's their first credit card, or they have other loans that are more expensive than this, and this is basically the best alternative, giving them a better option to meet their financial goals. And then the second category is on the responsible lending. So for responsible lending, I think this is quite important, especially for consumer loans, to understand if clients really understand the loan terms, if clients are feeling that the repayments are a burden. And so this was something that we weren't sure when we do studies either with Vexi or with other consumer lending companies that we finance, how the results will be. And I think it's also a really good opportunity to, if there's any areas where we see potential areas for improvement, to share the feedback with the company. Oh, maybe not in the case of the Vexi study, but maybe in other cases we see, oh, you know, some clients shared the feedback that they didn't understand the loan terms or the repayments were more than they expected, so that we can also support the companies to promote more transparent disclosures, especially when reaching underserved populations that might not have the financial literacy to really understand when they take out the loan. And then I think the last piece is really on measuring the financial well-being. So I think for us, measuring improvements in quality of life is really key, because at the end of the day, if people are able to meet their financial goals, it will help improve their quality of life. And I think that that's really key for us. So by asking people, did this product improve your quality of life? And if so, how? Gives a lot of rich insights on the customer experience. I think the last piece is on the qualitative insights. So for us, I think the client stories are really powerful, because especially as a global fund that invests in fintech companies in Mexico, but also in Asia, we might not always understand the lived experience of someone getting their first credit card in Mexico, and understanding the challenges that those clients face is really helpful, I think, for us as investors to be able to deploy more capital to those who really need it. So yeah, these are some of the insights that we learned from designing the questionnaire and collaborating with Vexi and Weaver Birds. So I think one of the last questions I want to pose to the group is on responsible use of AI, because I think this is a question that we get a lot when trying to pilot new AI tools that are still evolving, is how can we make sure that we're gathering insights in a responsible way, that we aren't perpetuating biases when we potentially use AI tools to support in data collection or data analysis of gathering client insights. And what safeguards do we need to make sure that we aren't perpetuating harm, but are actually using these tools to improve the customer experience? So would love to hear first from Timon on your insights on responsible use of AI, and then from Cynthia as well.
Yeah, I think this is similar to what I mentioned before, but again, I think a big part of it is thinking about AI as a tool and not as an end solution. Like, don't use AI as a black box into which information goes in and you don't know what happens to it, and then it comes out as something else. I think the goal isn't, again, it's not about automation for the sake of automation. or like tech for the sake of tech. Like I'm the most analog guy actually, but it's about like I said before, augmenting human intelligence with like repeatable, scalable tools, and that's I think with that kind of approach, that I think that is quite a responsible approach to using AI generally. I kind of think about it as like managing a junior analyst. Like these tools, I think they perform the best with like very clear, like broken down sequenced instructions that are quality checked. It's very much, it's not just about prompting. It's very much these tools to work and work safely and effectively. It's really about like workflow sort of engineering with a lot of human oversight as guardrail. I think again, with that approach, I think that is a responsible approach generally to using AI.
Thanks, Timon. Yeah, Cynthia, would love to hear, as you're using more AI tools at Bexy, how you're thinking about making sure that responsible and ethical use of AI is there, while also trying to move quick and use AI to improve efficiency over time.
Yes, running a credit card business. With running a credit card business, like the security and the privacy is like, it's not negotiable. There is a lot of sensitive information of our customers that we might have to make sure they keep private. So the use of AI has three pillars for us. The first one is security and privacy by design. So the AI systems we use, for example, the customer service bot, are built to handle only non-sensitive information. When a user asks something specific, like the status of their car delivery, the model never sees personal data. It only receives the final response generated from our secure internal system. So this protects like every client interaction and ensures that no personal data ever leaves our environment. The second is it is built to avoid to mitigate bias through design. So we use advanced prompt engineering to define a neutral, respectful personality that treats every client equally, regardless of the tone or the language or the financial literacy level. Like, we ensure that every interaction is consistent with all the customers. And third, for us, very important is to keep humans in the loop. So the client always have the control. They can always access to speak with a human, and that gives us transparency, that keeps us accountability, and we keep empathy at the center, especially knowing for 65% of our customers, Bexy is their first credit card. So we want to make things easy and empathetic for them. And finally, we work very closely with our information security team. So they review every new AI process before it goes live. So we make sure that we comply with our safety and compliance standards.
Thanks, Cynthia. Yeah, just to share a few insights on responsible use of AI from our perspective at Axial Capital. I think one thing is to make sure that we're really being careful about the tools we use for data privacy, as well as to try to avoid the risk of biases. I think the risk of biases is really huge, especially in reaching underserved populations, that a lot of times these populations are not fully represented in the data set that the AI tools are trained on. So there really needs to be oversight in seeing the processes and the results. For example, if we ask AI to synthesize the findings that we had across many conversations with Bexy's clients, for example, we need to make sure that we're not, missing the voices of certain clients that might not necessarily be as well represented in the database that the AI is trained on. And then I think another piece that I'll just mention, because I think it ties into one question that we saw in the chat, is on making sure that AI tools are really culturally relevant in the context where we work. So this is something that I think there's still a lot of room for improvement, because AI tools are trained on a lot of data that's on the internet, but there might be certain languages or certain populations that are not necessarily, AI tools are not necessarily developed for those populations. So just to give one example, we also did a AI-powered impact study with one of our portfolio companies in Indonesia, and it was using conversational AI. So basically, it's like a phone call where they call the client, they ask about their experience, how did they use the loan, how did it affect their business. But instead of it being a human calling, it's like not fully like a robocall, because the AI tool will, respond to what the client says and ask follow-up questions, but it's still not necessarily a human call. So we had to do, basically, because we have Indonesian team members within Axial, we had to ask them to test the tool and provide feedback so we can try to tailor it as much as possible to the client population before we actually use it, because we realized the way it was phrasing certain questions was not necessarily culturally relevant in that context. So I think it's really key to have oversight of, okay, we need to have people who really understand the market, who work with us before we start just deploying AI everywhere, to make sure that it's actually appropriate in the local context so that we can actually use it to get better insights. So yeah, just wanted to share that story. Great. So I think given that we're coming close to the time, I just want to have one sort of final question for the group. And then if any time allows, I would encourage people to also share their questions in the chat, and we're happy to also try to squeeze in any answers to other questions that come from the audience. So it would be great to hear from you. If you have any questions, feel free to share them in the chat. But just to close with one final question for the panel, I would love to just hear your sort of expectation for the future on how AI will continue to shape the future of gathering client insights around financial inclusion. So imagining that we come back together, 5 years from now, what would you hope to see or hope that we have achieved by then that hasn't yet been possible because of advancements in technology, and what would be your role in making this happen in the next 5 years? So I'll maybe turn it to Cynthia first, and then to Timon, and I'll also share my hope for the future as well. So Cynthia, go ahead.
Yes. I was telling you before we started this panel that financial inclusion is very close to my heart. And something that annoys me right now is that I believe that there are some institutions that are exploiting the term financial inclusion because they are just counting numbers. So they are just counting how much people they gave their products, and they might have like stratospheric APRs, or they are not really going for the underserved, but I call them the soon to be banked, So what I would like to see in the years to come is how we can move from counting numbers to measuring progress. What is the real impact that we are making in the people's lives, but the products we create to serve them?
Thanks, Cynthia. Timon, what about you? What change do you hope to see in the next 5 years?
Yeah, personally, I'd love to see the mainstreaming of like real end user feedback that can be incorporated into decision-making processes that really impact the end customers and end beneficiaries. Like very often there's not enough visibility on what the real like needs and experiences, wants and desires, etc., of like those that are actually being impacted are, because this type of sort of end user engagement at scale can be really expensive and can take a lot of time. We are doing our best to build a tool that enables this, yeah, looking forward to 5 years from now when when we can see this happening.
Thanks, Timon. Yeah, just to share my sort of hope for the future, to end on a positive note, I think we see that there's a huge potential in using technology to basically move from where the impact investing industry has been in the past, where basically it's really focused on measuring outputs and with quite a bit of lag. So it's like, okay, we make an investment and then, down the road we see, okay, how many loans are we dispersing? And that's kind of it, but actually creating a continuous feedback loop, so that we can work with the companies we invest in to actually gather data on, are we achieving the outcomes that we thought we would achieve? Are the companies achieving the outcomes that they hope to achieve? And if not, to get that feedback in real time so that companies can also work to improve, or we can also inform our investment strategy on, hey, we actually want to be supporting more of these kind of businesses that are really delivering the outcomes that we seek to create. So I think for us, it's really about creating this real-time feedback loop that in the past has just been too expensive or too difficult. But with technology, I think these insights can be gathered more quickly, and it can really inform decision-making in real time, which will help us deploy more capital to companies that are really supporting financial well-being. So I want to also maybe just touch upon one of the questions that was raised in the chat, which is about not just using AI tools and technology to measure financial well-being, but actually using them to promote financial well-being. So I think this is a really great question, and something we've also been thinking about at Axial Capital, because I think it's great to gather these insights, but there's actually a lot of power for AI to reach the end clients and help us provide more tailored advice to them that wouldn't have been possible in the past. So this is something that we're exploring but haven't actually launched yet, is how can we launch like financial education tools or small business coaching tools that can be tailored to the clients and can leverage AI. So this is something we are exploring with some partners. I think there's a lot of potential here, but I think it's still in early stages to be able to scale these kind of solutions. But I would love to hear, I don't know, Cynthia, if you have been exploring anything on this space on using AI to not just measure, the surveys, but also help clients understand better how to manage their finances.
Yes, something that really stands Bexy out is we have very good default rates in our customers. So this was like, I believe I dare to say that we have one of the most healthy portfolios serving the underserved in Latin America with the lowest fees. So everybody asked me like, how are you doing that? And I think what we are doing is we put a lot of effort on what we call preventive collections in the user experience. So we really want them to know what's the impact of paying on time, on remembering the due dates, on getting to know what they can do and how they can use the credit card so they can increase their credit line. So for us, everything that we do to benefit the customer also benefits the business. That makes sense? So there's no use on having just a customer or to reach a customer with a very high credit line, not give him financial information. He has never used a credit card and he most likely will default. And that will harm the customer, that will harm the society, and that will harm the business. So our approach is totally different on financial education.
Hi, everyone. Sorry, my computer just completely disconnected. But
no worries.
No worries.
Great. Well, anyway, thank you so much. I think we're coming up on time, but yeah, I just want to close by saying thank you everyone who's joined this session. And it's been really great hearing from Timon and Cynthia. So thanks so much for sharing your insights and experiences.